Hi and welcome to Ticker Property powered by Movinghub. I'm Chris Bondon. On today's program, we'll take a look at what some real estate agents are doing differently when listing a property. Plus, we'll review the top 5 home loans in the market. To help find you some savings, I'd like to welcome Marios Rocker. Marios, welcome to Ticker Property.
Thanks for having me, Chris.
Marios, let's take a look at what the process is when you go for a home loan. There's obviously variable rates, there's fixed rates. Let's take a look at that and let's start from variable.
Okay.
What is a variable rate for our viewers?
Well, a variable rate ideally means that the interest rate that you get for your home loan can go up and down. You know, the first Tuesday of every month, the Reserve Bank meets and we hear on the news the rates are steady or they've gone up or they've dropped. Well, that's what usually happens then. If you have a variable rate, your rate will go up and down along with it.
So in most recent times, the RBA has always said we're going down by a quarter of basis points and down, and we're now into single digits or ones at the moment, less than ones.
That's right.
What is the RBA?
At the moment, they're 0.75%, so less than 1%, and that's the Reserve Bank of Australia. But of course, that's not what we're paying on a home loan. But it's nice to see that the variable rate keeps on coming down, which means that if you are on a variable home loan interest rate, your rate is also dropping.
Fantastic. So what is out there at the moment in the market? So we've got variable rates out there.
Yep.
You pay effectively what you get. If the banks increase their rates, you're paying more. Who's the top lender out there in the market?
Well, when we're talking variable interest rates, we have to be aware that there's different types of products that the banks offer. But if we just look at the real basic home loan variable rate product, we're seeing rates under 3%. And we also have to understand that the banks offer different interest rates depending on how much equity you have in your home. So if your loan is only 80% of the value of your home, we're seeing rates at 2.96% by Citibank. Bank of Sydney are also offering 2.96%. The top 5 are all under 3%. We've got Bank of Melbourne at 2.99. They're one of our major banks, which is nice to see. One of the majors at that price bracket too. Non-bank lenders 2.99, and then one of the smaller banks at which is Suncorp Metway at 3.03.
So if you're paying more than say 3% in these examples you've mentioned, the top 5 there.
Mm-hmm.
Is there a catch to those particular lenders where they're obviously giving you the interest at a lower rate than others?
Yeah, well, again, it's the way that the variable rate loan is packaged. So traditionally, there's 2 types of variable products. So you could have a variable loan and it could just be your basic home loan. Basically, you pay your mortgage. If you pay extra, you can take it back out. That's a feature called redraw. But if you go with a lender or a bank that has fully featured loans, which includes an offset account and a credit card, they're called packaged home loans. Now, they could be a little bit higher than 3%, but it all depends on the discount which the bank is prepared to give you for taking that overall package.
And as a customer, does the bank charge you a fee to get those benefits to give you a cheaper rate?
Now, of course they do. Generally speaking, yes. $395 is around about what you get charged. But don't forget, you get a package of benefits. You get a bank account, which offsets against the mortgage. You get a credit card, generally with no annual fees, and you get your home loan. But then you also get other ancillary benefits of paying this once annual fee to the bank. Discounts on insurance, discounts on other products that you have with the bank.
And by paying that $395 fee as such, how much money in interest plus packaged fees and products would a consumer get on average?
How do you mean?
So you pay the $395.
Yes.
As a consumer, am I saving more than $395 or $400? How much more am I saving as a consumer?
Wow. Without getting really deep into the way the discounts work, when you pay that fee, you're receiving a discount off the bank's advertised standard interest rate, and those discounts are quite significant. The end result is the rate that you end up paying, which will be around about 3%. It's all the ancillary products that you get that save you longer term, and they're the sort of things that us as brokers we look at and assess and determine if you'll get more benefits from having a packaged loan and pay an annual fee, or a non-packaged loan where there is no ongoing cost.
Yeah. So you, as a broker, you'll make that decision with the customer. There's no point paying $395 if you're not going to get that.
Yeah,
value
if you
back.
don't need it, absolutely.